Larry, has any of the selling whetted your appetite?
Well, I think the main thing, Carl, was that a lot of these stocks were stretched like a rubber band way above their moving averages, very high in relationship to the value of the business, and they're in the process of correcting, and this is the way the market works. And I think they're approaching what I would call rational buy points right now, with probably Apple and Google being the most attractive in the FANG group. I think Facebook, Netflix, and Amazon have a way to go. But, I think the thing that hangs over these stocks is the possibility of antitrust. And if you were to break up Google and in particular, it's very, very clear to me the parts would be worth more than the whole. And I think that's also possible for Amazon. So we're getting to a point where we could have a really good buying opportunity. But the momentum of these selling climaxes suggests that perhaps one should wait until the dust clears a little bit.
David, how do we know when that's happened?
Well, it's hard to take your temperature every moment of the day and decide when the best time to monetize is. And Carl, as you know, I'm in the venture capital business, so we tend to think much more long term, buy and hold as opposed to buy and trade. So we tend to focus our attention a little bit more on the IPO market and the degree to which the windows are opening and closing on the one hand, and the degrees to which IPO market can efficiently price equity for us when we want to monetize.
Larry, I'm looking at tech stocks, and we talk a lot about some of the biggest ones that have had these amazing runs year to date and over the last 12 months. But there are a number of names and even categories that haven't had big runs. Chip equipment, for example, or even some semiconductor names. We're looking at Applied Materials that is down still about 1.5% year to date. Same with NXP, Analog Devices. So when the market turns down like this, is it a time when maybe you look at some stocks that haven't had a major run, even within strong categories, and see if you can find some value?
Well, I've always found these things were a difficult game to play. I'm a great student of Buffett, and my expression was, because I spent a lot of my time in Boston, play all your games in the Boston Garden. And when you get into the semiconductor industry, you have economic cycles, you have market cycles, but you also have capital cycles. And very rarely do these companies have a situation where demand is balanced. It's either going one way or another, and they expand capacity at the drop of a hat. So you can have supply problems, you can have demand problems, and it's a very, very difficult art. I think it's a lot easier to make money in situations that are less cyclic from a capital cycle point of view than the semiconductor area. So I stay away from them.